This is the incident of March 11. That day, one RBI order created havoc. RBI forbade Paytm Bank from acquiring new customers. Paytm was also asked to appoint an audit firm so that its whole IT system could be audited. Now the second story is regarding BharatPe. This fintech company became news at the beginning of the year. There was an issue of corporate governance in the company. Co-founder Ashneer Grover was removed from the company. During this time, there were a lot of troubles for the company, Grover, new management and the CEO. This doesn't end here. The Reserve Bank is also keeping a close watch on online payment gateways that are asking for payment aggregator licenses. They are already under scrutiny due to KYC issues, previous dealing with cryptocurrency exchanges and gaming apps. These examples are enough to depict the situation of payments bank and payment aggregators. Even RBI is concerned due to a storm in the rising payment and fintech sector in India. Now RBI is taking each and every step very carefully. Even NITI Aayog, the biggest think tank of RBI, and the government is looking into this. The issues regarding digital bank license. In fact, in November, NITI Aayog presented a discussion on the digital bank. It said, for financial inclusion, license for the digital bank must be given. But the RBI vetoed it. It happened at a time when recently RBI issued detailed guidelines for digital banking units (DBU). In this year's budget, there is a target of opening 75 DBUs in 75 districts. Now the question is, when RBI is eager to open DBUs, then why it is having issues in giving licenses? The question is valid. So the fact is that previously, existing scheduled commercial banks will be allowed to open digital banking units. This will not include regional rural banks, payment banks and local area banks. Now let us come to digital banks. They will be completely different, and it was NITI that talked about giving license to fintech companies. There was also talk about these banks being allowed to take deposits and grant loans. Now the question is, when both RBI and NITI Aayog are looking for financial inclusion, then what's the issue? So RBI has some reasons due to which it has objections regarding digital banking license. RBI has strong arguments for this. The first reason is that the RBI doesn't want this market to be scattered. It feels that promoters of new banks will have difficulty in passing its fit and proper criteria. Getting a bank license is difficult. It's not easy for a promoter to fulfill it. 7 years ago, RBI gave 11 licenses for Payments Bank. There was a lot of celebration then. Now the party is getting spoiled. Now there are only 6 payment banks, and out of which 5 are closed. RBI doesn't want this situation in digital banks. Even with a small finance bank, RBI doesn't have good experience. RBI feels that small finance banks are unable to reach at a large scale. Figures state that existing 50% branches of small finance banks are limited to urban or semi-urban areas. This doesn't do justice to the objective of financial inclusion. RBI is also concerned due to the recent incident in BharatPe. It feels that promoters are not that serious about running the financial units. RBI is also concerned about issues of corporate governance. RBI is also worried that a banking license might be an exit route for investors. This means they will just make money and then leave. Now that RBI is so against all this, neo-banking companies like Razorpayx, Jupiter, Neo, Fee and Open are losing hope of getting a digital bank license. Well, all of it will also depend on what RBI and the government will do on this matter.